Think about the last time you ordered food delivery. A driver got in a car, drove to a restaurant, picked up your burrito and drove it to your door. That's a £2,000 vehicle burning fuel, adding to traffic, and costing the platform money just to move half a pound of food 2 miles down the road. There's a company that looked at that and asked, why are we still doing this? Today on episode 4 of Ticker Talk, we're covering SERV Robotics. Ticker SERV, listed on NASDAQ. No jargon, no financial advice, just the basics so you can decide if it's worth a deeper look. Let's get into it. SERV Robotics builds autonomous sidewalk delivery robots, small electric self-navigating machines that roll along pavements, cross streets at crosswalks, and deliver food directly to your door without a human driver involved at any point in the journey. The origin story matters. In 2020, Uber acquired a food delivery company called Postmates. Inside Postmates was a small robotics division experimenting with sidewalk delivery bots. Uber decided it was a distraction from the core business and spun it off as an independent company in 2021. That spin-off became SERV Robotics. The technology has come a long way since then. Their latest generation, Gen 3, travels 48 miles on a single charge, carries up to 15 gallons of cargo, and moves at 11 miles per hour. They've achieved level 4 autonomy, meaning the robot navigates safely without any human intervention. No remote operator watching a screen. The robot makes real-time decisions on its own. The AI powering these robots runs on Nvidia's Jetson Orin hardware. When Nvidia CEO Jensen Huang featured SERV at CES this year as a showcase example of physical AI, that was significant. Nvidia is the most valuable hardware company in the world. You don't get that kind of endorsement by accident. On the commercial side, SERV deploys through both Uber Eats and DoorDash, together covering approximately 80% of the entire US food delivery market. SERV doesn't need to build its own customer base from scratch. It plugs into existing infrastructure with millions of people already ordering every day. Here's where the story gets more interesting than just food delivery. In January 2026, SERV acquired Diligent Robotics for $29 million. Diligent makes Moxie, a hospital robot that autonomously delivers medications, lab samples, and supplies between departments. Over 1.25 million hospital deliveries across 25 plus hospitals. Each facility generates over $200,000 in annual recurring revenue. That's a completely different business from food delivery. Recurring healthcare contracts that don't cancel when it rains. The numbers are early, but accelerating. Full year 2025 revenue, $2.7 million. Q4 alone was $900,000, up 400% year over year. Fleet scaled to 2,000 robots across 20 cities, serving 4,500 restaurant partners at a 99.8% delivery completion rate. 2026 guidance, $26 million, roughly 10 times 2025, boosted by Diligent. Cash position, $260 million. Extraordinary runway for a company this size. The catch, $101 million net loss in 2025. The burn is real. The bull case. ARK Investment Management estimates robotic and drone delivery could be worth $450 billion by 2030. SERV is trying to be first at meaningful scale in a space still being defined. Gen 3 robots cost 65% less to build than the prior generation. SERV believes it can bring delivery costs to $1 per order at scale, far below any human-driven alternative. If achievable, the economics of this business look completely different. Hospital robotics changes the risk profile entirely. Recurring healthcare revenue alongside delivery fees creates a more resilient and defensible business. And Nvidia's public endorsement is the kind of third-party validation money genuinely cannot buy. The bear case, $2.7 million in revenue against $101 million in losses, is a wide gap. Even at $26 million in 2026, the company is far from profitable. You're buying a vision, not current performance. The valuation is stretched. Technology risk is real. One high-profile safety incident on a busy sidewalk could damage regulatory momentum significantly, and Amazon and Starship Technologies are well-funded competitors already in this space. One-line summary: SERV Robotics is further along than most people realize. 2,000 robots deployed, Nvidia's backing, Uber and DoorDash as distribution partners, and Hospital Robotics adding recurring revenue. But the gap between vision and financial reality is still wide and requires real belief in a $450 billion future that doesn't fully exist yet. That's SERV Robotics, the company asking why we're still delivering burritos in £2,000 cars. Educational purposes only. Do your own research, like, comment and subscribe. New episode every week. See you in the next one and have a great week ahead.